continue with it. So, good afternoon, good evening. This is Demetrius with Akeelah Traders and Akeelah Trading Academy. And so tonight we're going to do what I'm going to call a market review. And we're just going to walk through a couple of different assets today and highlight. I wanted to keep this view on here so I can see if and when someone does show up. That we're going to take a look at the market and several different assets and kind of focus on what we've looked at over the last several weeks to several months and make some comments and things on here. The whole purpose of this tonight is going to be to walk through how we read the markets, really how we assess the markets, how we look at things from a top level standpoint and kind of get an idea of overall where the market is moving. So I call it our market makers strategy for our overall Akeelah market makers. And what we do is we typically look at higher level time frames and follow the directional flow of the market. So our thing is focused on not using any kind of indicator. So our overall trading strategy is a way to simplify looking at the markets, is to look at the higher time frames and let these higher time frames drive for you a picture that the market makers are painting for anyone who's in the markets. And so our overall mindset is that looking at charts, looking at trading candles, that they are a way to tell a story. So for us, looking at candles is like letters. If you're reading a book or something, candles are the individual letters. If you put enough letters together, you make words. If you put enough words together, you start to form a sentence. And that sentence starts to tell you what is going on in the market. Is this market trending? Is it moving up? Is it moving down or sideways? You put enough sentences together, and pretty soon you have a paragraph and short stories that are going to give you that directional flow of the market. So we're focused on how to read these time frames and read what the market is telling us. So in today's review, we're going to do that, and we're going to cover the first asset we're going to take a look at today is going to be Bitcoin. And so I'm going to start with Bitcoin. I'm going to zoom out a little bit and go to the weekly time frame and really give us a picture of what Bitcoin has been doing. I know I've got several markups and things on my charts right here, but all of these are annotated notes to kind of just let us know where we are in the overall market. And for these purposes, I'm gonna hide all of this stuff for right now because I want to show how we approach the markets in general. And so this is the picture of Bitcoin. So Bitcoin has been on a pretty aggressive move since back here this was early to mid 22, actually mid to late 22, when we bottomed out around 16,000. This was the previous high from former years around that 16,000 mark. But since then, Bitcoin's been pumping up and up and up. And so if we look at where we are now, the overall structure that we've been watching most recently for Bitcoin has been looking at these highs here around the end of September. So the end of September, first part of October, Bitcoin hit an all-time high up here. That all-time high was almost 127,000, 126 and some change. And so once we had this high, there were several things we were able to come in and look at the market and see that from our structural standpoint, that the market was given signals that this overall bullish structure was going to break. So from this time frame back here, when we were in the mid 50s to 60s, we had a continuous push up. Again, this is the weekly time frame I'm looking at right now. So on this weekly time frame, we were establishing zones, weekly, what I call weekly demand zones. So even through this time period that we had these highs back here, we made a high, peaked right over $100,000. The support at that time was down here, back around the 70s. You notice the market pushed up. We crossed over 100,000 again, and it came back down to these areas here. These are gaps. We identify these as fair value gaps that the market is very likely to come back and revisit. So at this time, we would have been able to identify when Bitcoin was first crossed 100,000 that there were some gaps back here that needed to be filled. And in order for the asset like this to continue to push up, that most likely those gaps were going to come down. And so you see this area right in here between 81,000 and 89,000. The market needed to come back here to satisfy itself. And so we did come back down to about 75,000. Very good. Since then, the market pushed up again and came to these overall highs. So the picture that we saw here let me jump to another one of these where I don't have all my markings. Let's see, because I want to show the first signs of trouble that we saw back here in the first part of September to maybe into October. Okay, so this is the time period when Bitcoin had its all-time high. So when we reach this all-time highs, this area right in here, I have highlighted in blue, this was a demand area. And so the way we treat demand zones, if you identify them properly, you cannot go by the traditional, every trader in the world's definition of a demand zone, because it doesn't fit the overall marketplace. So we have a very strategic and specific way that we identify demand zones. And so once we identify this demand zone, it says if this market is going to continue bullish like this, continue this momentum, then we need to hold this demand zone. At that time, that demand zone was between 115 and 108. So if Bitcoin were to continue, and this is the time again when a lot of the pundits, a lot of the market gurus, a lot of the news, professionals, I would say, for lack of a better word, were saying, hey, Bitcoin has crossed over 110, 120. It's time to start looking at $150,000, $200,000 Bitcoin. And that could have been the case if we had sustained these demand zone areas. But once this demand zone here got broken, so if we had stayed bullish and stay above this one, and by above, meaning in our structure, we go by closes. So the market wicking below here, occasionally making some pushes below, that means nothing from a market maker standpoint. Everything we look at is based on closes. Closes meaning the market closed, the books were officially closed and perpetually closed at that particular price point. So in here, we needed to see as long as we didn't see a close below 108.4, 108,400, then we were good. But if you see what happened here in this area, we got to close below here. And so once this market closed below that, that was a huge signal that the overall bullish momentum of Bitcoin, it may be continuing, it may be getting to $150,000 or $200,000, but it's not going to do it now. And you have to be able to see something like that. And so if we go down, and this is the weekly chart, I'm staying very high level for this purposes right now, but the daily chart gave us that signal. So we primarily stay at the 4-hour time frame, the daily, and the weekly. Anything below 4-hour time frame is really just a bunch of noise in our book. So I would like to, I'm going to zoom in a little bit and come down to this daily and see, well, what did we see here at that time on the daily structure? And you can see the signal that we got here on the daily. And so same thing, the daily, now this was that weekly structure I had identified. Once we made this high, the daily support was still down in this same area. So it overlapped a little bit with the weekly, but the bottom of it was pretty close to being the same. So this same 108.3. And if you notice, this is the area I have circled right here. Once we got this daily close, this was on Friday, October 17th. So October 17th, when the market came and produced a daily candle that closed below that, that was a signal that trouble is brewing. And so in our overall strategy, we identify a couple of different things that happens when a market breaks structure like that. So in general, a market that is bullish is going to continue to be bullish and produce these kinds of demand zones that I'm speaking about. So zones where the market may pull back to these areas, but it should hold support and it will propel forward or continue moving higher. If we get a violation of that, so as long as the market is doing that and producing demand zones, you can count on that market continuing to be bullish. But when we see a structural break like we did, and we have a specific way of identifying a break of structure. Again, it's not your traditional way. If you just, Googled or ask your favorite AI, chatbot, what a break of structure is, they're not going to define it the way we define a break of structure. And so it's very critical. That's why our our process of reviewing this is, I would say, significantly and more consistently um, correct in identifying the market's direction is because of the way we identify these zones. So that's something I encourage you to delve into. So, but once we got this here, typical things that we see when a market breaks structure. The first thing is that almost 80+% of the time, the market makers are going to shift the market back in the other direction as a fake out. So what I mean here, Bitcoin was going up, 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 up. We had a structural breakdown that says, hey, this market broke structure. Once we see that, people are thinking a couple of different things. People that are watching usually all these indicators, volume indicators, RSI indicators, moving averages, all these different kinds of things that in our world is noise. Once people see something like this, they'll say, oh, Bitcoin did, fail to hold this area in here, and, it's falling now. And so we need to expect it to start falling. And that may be true, but if you notice what happened here, this was on October 17th. That price closed at around 106. Immediately after that, the next several days, so I want you to see these days between October 17th and October 28th. So for the next 2 weeks, Bitcoin did nothing but pump up, 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 up. This move here is what we typically call the expected fake out, right? But where is the market going to fake? How do we know that it's just a fake out and that it's really not pushing up? Well, that's where we identify sources. And so if you see here in yellow, I have highlighted source zones. And these source zones, this one here was drawn on the weekly, but these source zones are the areas for us to expect the market to pull back. So I expect when I see Bitcoin make a drop like this, I'm not going to follow this drop. I want to understand that drop is coming. That's a signal that's saying, hey, this market is getting ready to pull back. But before that happens, again, 80+% of the time, the market is going to give this kind of fake out. So we got to look for that. You want to see and anticipate this. So if you're going to, maybe if you're holding this asset, in this case, Bitcoin, if you're holding that, you got to see, hey, this is one final opportunity I have to cut my strings and get out of this baby. You should have been getting out of Bitcoin when it came back up to 110, 112, 114 or something like that. Not thinking, hey, I did good. I dollar cost average. I got it down at 100,000, so I can, expect to ride this thing back up again. No, that's not what's happening. So you have to be able to recognize that as a push down, a fake out, and then the real move is going to come. And so let's take a look at this as I zoom out a little bit on Bitcoin and see, once we see this, where we are typically looking for. And this is a structural way that we approach this at Akeelah. And so once we see something like this, the market itself tells us where the potential target is. So if you watch any of our postings, whether it's videos here, I encourage you to take a look at our trading channel on TradingView. On TradingView here, we are Akeelah Traders. I'll show you here, Akeelah Traders. So go in, check out our profile, see some of the assets. We don't get a chance to post a lot of different assets all the time, but all of the posts that we do, you'll see that we're following a strategic plan, a consistent way of reading and analyzing these markets. So I encourage you to take a look at those. Go back and look at the posts that we did on Bitcoin at that time to see where we were targeting the market to go. And what you'll see is that with this kind of structure, it broke it on the daily. And then I'm gonna go back out to the weekly again, zoom back out weekly one more time to show what we were targeting. And just bear with me while I zoom into here to see, okay? So once we see a weekly break of structure, because it did it on the daily and the weekly pushback, so we push back up into here. So I typically expect to see a break of structure, the market to push back up into this yellow zone, which is already predefined. We already have that predefined by the strategic method that we use to read the markets. So you will eventually, be able to learn, or you need to eventually be able to learn where these potential pullback areas are, because they will identify for you where to expect the market to pull back. And then when it makes its real move, which in this case was going to be back down, where is it going? Is it coming back down to 100,000? Is it coming to 90,000? Is it coming all the way back down here to 85,000, where this previous level was before? And many people that look at demand and supply, they will say, well, hey, this was a key area right in here that we're probably falling back to this area. But that's not how we look at this. So we were able to see that once we saw this structural break here on Bitcoin, that it was going to fall back to what we identify as a source for this. And our source was sitting way down here, back at 60,000. And if you'll notice up here, once we see this structural break, our notes for this was, hey, this is time to get out of Bitcoin. We had a weekly break of structure down and return to the source. The target is our weekly demand source, 59.9. So this is, again, when Bitcoin was somewhere around 110 to 116, in that area. We could see, so to speak, that it was coming back down to the 60,000 area. So that's where we are. Bitcoin fell back pretty strong for this time period between October of 25. It took all the way till February of 26 to get there, but it was a consistent fall down. That's what we've got to be able to learn to read. So let's fast forward to today and see, well, what is going on now? So as of right now, this weekly source down here, this weekly demand source, in our mind, this is still not fully satisfied, but there are some things to look out for to tell us whether Bitcoin is ready to continue up again. So for that, we know that once we get down to this weekly demand zone, it is a demand source for us. So a demand source means there are a lot of buyers. There are large institutional buyers with billions, hundreds of billions of dollars waiting to buy Bitcoin at this area. So once it got down to this area, we expect to see a pushback up. That's when you buy it. We don't buy the dip, so to speak, or try to catch a falling knife while it's falling from 100,000. 110,000. You don't try to buy it at 90,000, at 80,000, at 75,000. You wait until it comes back down into this area. This is the buy area. So now that we're here, we're going to zoom in, down, go down a couple of levels to see how the market is responding. We don't just automatically assume that this is the buy of buys and we're going to take off, but we go down and look for another structural break. So I'm going to come down to the 4-hour time frame, and I have a strategic reason for coming to the 4-hour, but I'm not going to get into all of that right now. But here, once I come into the 4-hour, so I'm still looking inside of this area. So this is my large weekly demand source that was between 52.5 and 59.9. This is where the market fell down in here. So once we're here, I'm coming to the 4-hour, and what I want to see, what I'm looking for is, do I see a 4-hour structural break back up? Meaning this market has been falling. So for months and months and months now, we've been falling, going down and down and down. So our approach, again, is a market that is falling. It will continue to fall and produce supply zones. That means it's going to pull up and then it's going to sell again. It's going to pull up, it's going to sell again. It's going to pull up, it's going to sell again. It's going to keep doing that. The market is going to continue doing this kind of cycle. In a down cycle, it's going to come down, then it's going to pull up a little. It's going to come down again, lower, and it's going to pull up again. It's going to come down again, lower. A market that is falling is going to continue to do this until we see a structural break, which means at one point, the market is going to have to push back up. And that structural break is not always at these peaks. That's a traditional way of identifying break of structure. We do not use that. So I'm not looking for it to cross these peaks. So to pull back to here, I'm looking for it to make a structural break. That break could be this big. It could be this big. What I'm looking at is the formation of the candles that are going to tell me whether that's a structural break or not. So that's the kind of pattern that we're looking for. So I'm going to move that out of the way. Actually, I'm just going to delete it because I don't want all that on my chart. So what I'm doing now here, down here, is I'm looking for a structural area to tell me is, and this is on the 4-hour, so I have to treat it for what it is. The 4-hour time frame, do I see a structural break up? And so if I look at this, where this market has fallen down here, this came down here on June 30th. It's when we hit this. So we're 3 weeks in. So do we have a structural enough basis to tell me that Bitcoin is ready to start going up? I would say yes. Yes, the answer is yes. Is it ready to go back up and start testing highs again? No, it's not, because I'm just looking at 4-hour. So the 4-hour tells me that if I'm looking at this, my 4-hour resistance, what I would call the structural that needs to be broken, is going to be right in here, right in this area. I want to make that red. And that's based on a structural way of reading it, the way we would identify. So this is an approximate area here. So what I need to see from this structural standpoint, 4-hour, I need to see a close above this area, which I did right here. If you notice here on June 30th, we had this low, but the market did close back above here. So what do I typically expect to see when I get that kind of a structural break? So this would have been a 4-hour break of structure. I expect to see the market do that, and then immediately or very soon after, I want to see it pull back. It's not going to break above here and keep going. I expect to see it pull back. When it pulls back into this area, this is where the buy is. So the buy on Bitcoin for this time period right now was back around the 1st of July. So this was when the price was somewhere between 58,000, let's just say all the way up to 60. So somewhere between July 1st, 2nd, 3rd, up through, oh, I'm sorry, these are 4-hour candles, forgive me. So somewhere between July 1st through July 2nd. So under 60,000 was the good buy area for that. So now that we have that kind of a break, I'm going to go to my other Bitcoin chart, because I already have this annotated on that one, to show you this is what I'm looking for. So you see, when I come to this chart, this is my supply zone. This is the area that needs to be broken. I already have this highlighted as this is the structural break. It came back to the source. So what am I looking for here? Here we have a H4 break of structure up, and it pulled back to the source. So the target that I'm looking for is going to be either my daily supply zone or my monthly level. And I have a key monthly level already identified on Bitcoin of 71,400. So from the time that we made 60,000 or so, crossed above 60,000 and closed and retested that area, from that point, we have a structural reason to see why and how Bitcoin, on this current push now, we should be pushing back up to around 71,000. That's my target for where Bitcoin is going. Now, there's a couple of things that may be in the way to that. Let me go to my daily chart. And if you see here, this is what I had previously identified. This was a daily fair value gap area that was previously support that got broken. So now that same area, I expect to see some kind of resistance in here. But if you'll see, we already had this mark that I expect to see Bitcoin follow this kind of pattern. Pull back a little bit, pull up a little, back here, up to around the 71,000. So that's the projected path for Bitcoin on there. If you want to see more details on that, I would say, let me point you to, again, our channel here. I'll show you the particular post where you can go in and see the latest markups on this. This was right here. So this was on July 5th. So shortly thereafter, after seeing that break, this is the post where we already had the break of structure up. So this is our post on July 5th on TradingView that we already identified this and say, hey, you need to expect to see Bitcoin push up to 71.4. At that time, it was back down. It was down around 62. So we're up maybe $5,000-$6,000 from there now. But read here, you can go and see some of the details as to why we were projecting that. And that'll wrap it up for our coverage of Bitcoin. So let me go back to, let me see, did anyone join on here with any questions? So if there's anyone on here so far, if you have any questions on that, I'd love to see a comment or something in the chat on that review for Bitcoin. And I'd encourage you, we'll have a Q&A follow-up after this. If you go to our website and you're able to register for that, it's free. There's no cost for that. You just need to register to get the link for Zoom. And so to do that, you'll need to go to Akeelah Trading Academy. So it's tradingacademy.akeelah.io. Just come here and register for free, and it'll take you down to here. And you can just put in your information, and it'll give you the link to the Zoom, and we'll jump on that right after we finish this class or finish this session here on YouTube. So if there are any questions in there, I'd love to see a comment or a question or something in the chat. Otherwise, I will continue moving. So let's go to the next one I want to take a look at. It's going to be a stock that we've been following. That's Eli Lilly. So I'm going to look at Eli Lilly. I'm going to start on the daily time frame. And let's just get an idea of what this market has been doing. Let me see. Not sure why my chart is freezing up a little bit. Okay, went back to Bitcoin. Let me go back to Eli Lilly. Where's Lilly? Right here. Okay, so yeah, let's take a look at Eli Lilly. So I'm going to do a couple of things on this one. This is the daily chart, but I am going to go back just a little bit more, back to the hourly on here. And the only reason I'm going down to the hourly is because this is where this market first started to indicate that something was going awry. And I want to show you how that hourly structure has already played out, because I say that we typically want to stay 4 hour and above. But one thing that we've learned through our kind of market maker strategy is that the market repeats itself. So the higher time frames are developed by structure that's created on the lower time frames. Now, the more reliable time frames is the 4 hour and above. So that's why I don't want to go down to this hourly unless I'm just peeking at something. But I'm using this for educational purposes right now, just to show you what we saw. So the same type of thing, oops, I didn't mean to do that. The same type of pattern that I was just discussing, I'm going to go back here to Eli Lilly. And this is on around the end of June 29th, maybe June 30th to the first part of July. We saw the similar kind of thing. I was in some other chat boards, discussion trade groups, and I saw someone mention something about Eli Lilly. And so Eli Lilly is actually a stock that I have never, ever, ever looked at this stock before. I don't think I've ever looked at it in my life prior to 2 weeks ago, or so 2 or 3 weeks ago. But I quickly came to the chart and was able to see, hey, there's some structural issues here with Eli Lilly. And so the first thing was, this is on this hourly chart, and the break of structure that I saw. So this was a demand zone for Eli Lilly. So here we had a high of around, on June 29th, the high came up to around 1240. Well, at that time, the demand zone area, where the market, if this market is going to continue buying, where it should have had a healthy pullback but sustained it, should have been in this area right in here, which is around 1210 to 1214. And so this 1214 area, 1210 to 1214, Eli Lilly has to stay above this if this is going to stay bullish. And I know people from a fundamental standpoint are looking at, Eli Lilly's got all of this, patient trials and all kinds of things that they have, partnerships that they're working on, other corporations acquiring people, there's earnings coming up, a whole bunch of stuff that as a technical trader, I ignore the majority of. And so what's important to me is that Eli Lilly needs to stay above this 1210, this area. So let's see what happened. We got a break down below here. So once again, from our mindset, when I see a structural break, I expect to see a pullback, a fake out pullback back up to the source of that. So when that happened, I came to identify where's the source area. That's my yellow right here. this yellow area here from 1238 down to 1228. So it would not surprise me that after seeing this structural break, to see Eli Lilly pull back up here. But this hand, they've tipped their hand here. The market makers have tipped their hand and told me that we're ready to bring this down. But before we go down, we want to see how many suckers we can take with us. So we're going to fake and push this back up. So I posted in a couple of those other trade groups, did some, I think, on TradingView as well, and saying, hey, this fake out issue here, you need to expect this because this supply source area, I expect Eli Lilly to pull back up into here and then drop. Okay, so where is it going to drop? Let's go to, let me see if I can just go straight to that post on here. This may do a better job of explaining it than I have myself. So let's go to the Eli Lilly. Okay, Eli Lilly right here. This is on June 30th. So we're saying, hey, Eli Lilly, is this a healthy pullback or a bigger problem ahead? So let's go and look at how we were reading it at that time. So this is around the time period that I was just referencing here. So on this date, this was posted. And if you come here, you can see the post on TradingView on June 30th. So at that time, the price was 12.11. We had already identified this break of structure here and expected this pullback. So H1 break of structure down and it returned back to the source. That's a classic market makers move. The classic suckers move is what I call it. And so that got rejected. We're looking for the rejection there. So where's the target? Once this is sitting at 1210 to this 1214 area, what is the target? Is the H1 demand source, $1,115. This range here, so this actually the range on that is this 1115 to 1125. So at that time, based on this kind of structural read, again, it's a 1 hour. So a 4 hour would have been even stronger confirmation. A daily would be a very strong confirmation. But here on the hourly, because I've had this break and the pullback that got rejected, I'm with pretty good confidence now. I can say that this market is going to drop down to 1115 to 1125. And again, among the news and chat groups and things like that, people are saying, well, no, there's no way Eli Lilly is going to keep moving. I know this particular asset. We've had some people say, hey, I traded this for a long time. I know this stock. I know where it's going. No, it's going to keep moving. It may pull back a little to here, but it's going up to 1250 and 1280. And I'm thinking, no, it's not. No, it's not. And it may, it's just not going to do it now. And so let's play this out and see how this market moves. So we were expecting this to come back down to this area. These are hourly candles that we're looking at. I'm just going to fast forward on TradingView. And you can see, whoops. Okay. All right. So here, this is, we came down to 1,000. What is this mark here? 1,174. Okay. So the first part of that has already played out on the hourly time frame. We're still looking for this. Let's see. We're right now at 1216. But I want you to note one more thing here. I wish I could extend this because the market made another big fake out. This was on July 7th. This market pushed back up and actually made a new high, produced a new high. But notice how we failed to close above this. So remember, we're looking for closes. Closes are what matter, right? So if the market doesn't close at that point, it really is irrelevant, okay? So this is a structure that we're looking to still play out on Eli Lilly. Now that's hourly. I'm going to go back to the live chart because I want to see where our initial, I think that's our overall target. I want to see where my initial H1 target was. And the H1 target for this, I think was 1145. Let me see. Okay, yeah, right here. So it came down to, so this is current time now. So we came down to 1134. So that should have been going to 1135, I think it was. Yeah, so it came pretty close to that. Let me keep moving while we're on here. This is only giving me so many candles. Okay, so forward again, and this is the area that we're looking for. So it played around a little more, and looked like the lowest we came right to 1135, and we were expecting to come to 1125, or where is it on my live chart? Right here, 1133. So it looks like from TradingView it came to 1134, but pretty close, right? So the main point is we could see that from up here. We can see that back here when the market was between 1214 and 1230. So almost $100 drop for that. That's pretty significant depending on what you're trading. If you're trading options, if you're trading CFDs, those kinds of things on there. Okay. So now let's fast forward to the higher time frames on here because I want to look at my 4 hour. We've already seen that structure play out. So as far as I'm concerned, on the 1 hour, we've had the break of structure, pull back to the source for a fake out, and we've reached the 1 hour target. So I'm saying, hey, my full H1 target has been reached because it should have been coming either to this area or here. So that target is achieved. Now, while that was playing out, we had a 4 hour structure being developed at the same time. So I'll see the same thing on the 4 hour. I'm coming to the 4 hour, seeing where my high was, and I identified my 4 hour demand zone. So on the 4 hour time frame, if Eli Lilly was going to stay bullish, then we needed to stay above this area here. The bottom of this area is 1183. We needed to stay above that. We got to close below it. What do I expect to see when we get a close below it? I expect to see the market fake out and pull back up. It's either going to pull up, and this is the second level of what we typically look for. The first option is to pull back up into this source area. This would have been a strong fake out to pull up to here. The second one, if that doesn't happen, the second option is that I want to see the market just tell me that, no, I'm going to reject this whole demand zone. And if it does that, then I'll see something like pushes back up into this area, but the market refused to close back in here and definitely refused to close above the top of it. But to see Eli Lilly right now pushing up and giving me successive 4 hour closes, all of which are below the bottom of this zone, this just tells me this thing is not going. It's not pumping up. We're getting ready to pull down and test these lower areas below here where the H1 already tested. And so where are those potential areas? The target for the H4 would be this H4 fair value gap, which we've already reached that. So that one's already achieved. Now we're looking here for H4 demand source. This demand source is down here between 1090 and 1115. So down in this area, this yellow is where I'm looking for. There is a possible area on the daily that it could come to right around 1100. I'm saying that's not likely to hold just based on what I'm seeing, but possibly. But either way, right now, all signals are for Eli Lilly to push back down to the sub $1,100 range. Now, what's important for this stock is here. Earnings are coming up on August 5th, I believe it is. Yes, earnings are coming up on August 5th. So it definitely the industry that Eli Lilly is in, there's a lot of expectations for great earnings here. But this is also a good time for the market to over manipulate itself much more than what we've typically seen. And so how this is going to play out going into earnings, I can't say. Are they just going to keep bouncing around in here and faking out, maybe push a $20, $30 move back up, which $20 or $30 move from here would be back up to around the 1200, 1210. To me, that is still of no significance. So I don't care if it pushes up $10, $20, $30. This supply source here is the resistance area. So pushing any pushes back up to 1200 to 1220 are almost certainly going to get met with the biggest bear slap back down that you've ever seen. I'm expecting to see this thing. If I had to just project, I don't know the time frame right now, right? But if I was to project where this is going to move from here, is I'd expect to see something. Maybe we see another fake back up in here that will get rejected again, and then we see a good close. See here, we've already had one 4-hour close below this fair value gap area. That tells me that shell has already been broken. The floor, there's a crack in the floor right now here. So I'd expect to see that get revisited, maybe pull back, retest it again, and then drop down into this area. So that's what I would expect to see here on Eli Lilly. And I would make that red. That's the kind of pathway I'm expecting to see. But we'll see how it plays out. But this is all based on structure. So that's 1 hour structure, 4 hour structure, and now daily has done the same thing. Daily, if I zoom this out here, you see in this area, we have a daily demand zone. So daily was the third chance for the market to say, okay, maybe an hour is a little noisy. 4 hour, things could happen. But daily, the fact that you came and printed a daily break of structure and then tried to push back into here, and we've had, as of right now, 1, 2, 3, 4 days that tried to push back up into this demand zone, all of which got rejected. Same pathway. Now, I'm going to zoom out some on the daily, because if the larger daily structure plays out, then we're not just coming here to this 1080 to 1100 area. This will be a strong test area. This is where I'm saying that it's a daily internal source. It's possible that it could hold, but not likely, because this structure here has already shown that you've rejected. We didn't even pull back up into the supply source. So we didn't pull back up into here. If we get down into this area, again, it's possible that it could hold, but a close below this, which is about 1076, a close below that, almost surely is going to bring this all the way back down. So what I'm saying here is there's a daily fair value gap down here at around the 950 to 970. And then after that, the structural target for this, barring any of these other areas showing just uncommon resilience, the structural target for this is down here, 850 to 870. All right. So am I saying it's absolutely coming here? No, I'm not. I'm saying it's likely to come here. And what's going to prevent it from coming here, you better hold this area. And it's probably, seeing how earnings is just maybe right at 2 weeks from now. These next 2 weeks, better see Eli Lilly. If you're bullish, we better see it hold above this 1076. If not, something like earnings could easily, you could see a flash wash back down here to fill some of these areas. And these are of interest anyway, because there's some significant gaps down here. There was a gap between 851, which was the close on April 29th, and the close, we'll just say the open on April 30th was at 899. So this $50 gap right here, the market is not satisfied with that. Markets like this don't just push up, 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 and leave these kind of imbalances. That's a lot of imbalances. That's a lot of volume right here. So the highest demand area on the chart, highest and strongest desire to buy Eli Lilly is down at this 850 to 900 range. Okay. All right. So that's all for Eli Lilly. Let's jump to the next one, which probably for time's sake, this is going to be all I have time to review. It's going to be one more. And that is going to be, it's either going to be S&P 500 or gold. So help me, Lord. Which one should I do? Okay, let's look at S&P 500. SPX 500. Okay, so for the S&P 500 and for gold, if I didn't get a chance to get into that one in this review, and I'm just not going to make this excessively long today because I've already spent a lot of time on some other ones. But please go to our TradingView channel. You can see our progression on gold, the full structural layout of where it is projected to go from here. So let's dive into S&P 500. Let's start with the daily. So following the same kind of process, this is starting to sound like a broken record. We had a structural break on the daily on the S&P 500. This was back on June 5th. So June 5th, S&P, like many other assets, the indices have just been moving up and up and up, almost just relentlessly, right? And so that's a problem because this kind of structural move we saw the last time the S&P 500 was down into what is now my demand source area. This was back in February. So for the last several months, or was it? Oh, that's March. Yeah. So this was back in March. So for the last, 3 plus 4 months, almost 4 months, it's been doing nothing but buying, and not leaving during this path. What's more important, it's not the fact that it's just continued to buy, but is you're buying and you're not leaving structural support areas. That's the problem. And so when that happens, that we just get continuous buys like this, and we just see frequently higher candles, then that leaves a strong imbalance that the market is saying this has to be dealt with. It has to balance out. So all we're looking for is a sign to say if and when. Was it? Forget the if. When? When is it going to imbalance? When is that imbalance going to be corrected? You know what I mean, right? So I'm looking for a sign here, and when I see this kind of a structural break, especially on a daily. So for S&P, this is not a 1 hour chart. This is not a 4 hour. It's a daily chart. So I see this structural break here on the daily. Exact same thing. So this was my demand area. If the S&P were going to continue higher, we should have stayed above here, above 75.05. That did not happen. It broke structure. So what do I expect to see when a market breaks structure? I expect to see a pullback back up. So once this happened on June 5th, I was able to come in and identify at that point where the demand zone that got broken, identify the break of structure and the target for this pullback to tell me if the market is going to make this projected drop. So that source area, identify that in yellow, I expect it to pull back up into this yellow area and then drop. Where is it going to drop? Well, first, let's address the pullback. So either pullback option number one, which is preferred, is to come back into this yellow zone. Pullback option number two is to come back and retest this, but stay below the blue again. So that didn't happen. We pushed back up and came into pullback option number one. Option number one is always the stronger. And it's a stronger one, meaning that it's a stronger signal that the market is really going to go back down. All right. So now let's go back and see how that's played out. It pushed up in here once, got rejected, tried again, got rejected, tried a third time, a fourth time. These are daily candles, got rejected. And so now the market appears to be playing the story to say, we've tried to retest this source, and the sellers here have consistently told us that we're not letting it go higher. So now the next point that is in play is back to this demand zone. We need to see if the bottom, the lower part of this demand zone is what's being retested right now. This is, again, about 75.05. We've stayed below it, tried to push back up, got rejected. Today's candle, well, this is Tuesday, July 21st. The Wednesday candle was already producing because the market closed. But in today's push, it pushed and came back up here inside of this zone. So far for S&P, it's looking like the bulls are fighting hard. Their last stance is to defend this 75.05. So the bulls said, hey, we closed it back above. The sellers now need to see if they can push it back down. I would expect that would happen, but this is the battlefield right now. So a close back below, another daily close back below 75.05 is going to be the bears taking over again and saying, no, we told you we're done with this. So if that plays out, so right now the play is watch the daily candle for a close around this borderline of 75.05. If we get that rejection, the target is going to be the daily fair value gap or the weekly demand zone. So where are those areas? They're way down here. Daily fair value gap, if this gets rejected here again, the target for that is going to be between 68.50 and 69.50. That's the fair value gap on the daily. After that, that target, so that could hold, just depends on how long or how strong the market pushes down here. But if that gets rejected, the next one is to bring it down here to this 63.50 to 6,700 area. So that will be my weekly demand zone. And if you'll see over here, this is what I'm noting. Another daily close below 75.05. That's confirmation. So if the bulls are going to continue, if the market is going to recover, so to speak, and continue bullish, we better hold this line first. And then it needs confirmation. We need to get back up here into this source. So the way I'm reading the market, what it's telling me right now is that's not going to happen. And it's going to push down to these areas. We'll read it again. We're never trying to predict the market. We're trying to read and react. Read what the market is telling us, and take action based on what the story that's being played out. Okay. All right. So that's our projection on S&P 500. And that's pretty much going to wrap it up for today. I did not get a chance to look at gold, but as I said, please take a look at our TradingView channel. I'll show you where that is once again. On TradingView, you can just search for Akeelah Traders, all Akeelah Traders. And we'd love to have you subscribe here, follow us here, and you can see a lot of information here. This is the post on the S&P 500 back on July 15th. I think we did one prior to that as well. The NASDAQ, very similar kind of thing is playing out on the NASDAQ, guys. So the NASDAQ, we saw some of the crazy, same kind of structural break activity that we saw on the S&P 500. We made that post back here on July 9th. And one before that was, I'm not sure where it is now. Oh, NASDAQ. The first one, signal on the NASDAQ, was back on June 30th. So take a look through here. The one on gold is, I'd encourage you to go through and read this one. And maybe I'm just overlooking it, but it's in here somewhere. Somewhere we have a chart on gold and our analysis. Check out the one on NVIDIA. We've been watching Broadcom as well. So, here's the one on gold on June 30th. It was called "The Market Doesn't Trap Traders by Accident." Look at what is going on with gold. We expected gold to push down into this daily demand source. This is the area, 3880 to, maybe so say 4,000. This is the area we've been waiting for a long time for gold, to come down into. Back since we saw structural issues with it back in February, waiting for gold to come down to this area. Now that it's here, this is the demand area that's being tested. Can we hold this area? If we do, that's strong. This is a strong buy area for gold. If it fails, it's going to be catastrophic. And we don't see anything catching gold until back down here around 3,500. Okay. So follow us on there. Take a look at that. Leave any comments. And if you've enjoyed this, I would appreciate some likes here. We'd love to have you subscribe to our channel and let us know if there's anything particular you want to see in our reviews. But until next time, I appreciate you. Please like, subscribe, hit the notification bell so you can see when we post other updates, and we'll see you all next time. Thank you. If you are joining us, if you registered to join us on the Zoom live Q&A, then we're going to jump over to that right now, and I will see you all over there. Thanks, and have a blessed day.